Hi there, good afternoon. You've logged into Closing Trades on ET Now. I am Snehi Shah. With me is Mansi Dave. And well, what a day for the market if you take a look at how the markets are edging towards close for the day and for the week as well. Let's pull up the Nifty and take a look at what the market breadth is looking like. We're joining you from the SBI Live studio, and here's the rundown of what today's session has looked like so far. You have Nifty that inched up back in the green, so a significant recovery coming in from the day's low for the Nifty. Flat as of now with a hint of a positive bias, but still much better than the shade of red that we had seen towards the midday mark. Around 24,750 thereabouts is where the Nifty is at. Sensex 2 seeing some healthy moves. Nifty Bank once again in the green. Just want to quickly check in on what the broader end of the market is up to right now. You have midcap also that has once again started to outperform the breadth of the market. You know, the trend over the course of the week gone by, except yesterday, for all days of this trading session, trading week, we have seen that the broader end of the markets have outperformed the benchmarks, and that trend seems to have come back today. Small cap index is also up 0.3%, significantly higher than what the benchmarks are doing. But Mansi, which stocks are doing well, which sectors are standing out to you? Because at one point of the day, we only had autos that was holding on to the green, but things are turning for the better, if you could say that, for the rest of the market.
Snehi, it seems like the market is completely in the Friday mood because swinging between the gains and losses, and it's difficult to have confidence and conviction on the indices at least. Though we have a lot of stock-specific opportunities, and right now also if we see the larger players which are doing good in the market are the M&M, Reliances, Bharti Airtel, Eicher Motors, Maruti Suzuki, which are absolutely contributing to this up move. But at the same time, talking absolute levels and talking sector-specific, yes, barring automobile sector, at least in the first half and also till last hour of trade, only and only auto sector was trading in positive. And right now, if you see, it's just the real estate, FMCG and IT which are on the back bench. But apart from that, automobile as it was, metal is again seeing the shine of the day, pharma, financial services, energy, all of these sectors are doing good. But then it's quite a choppy market, as you can clearly see, a lot of volatility and a lot of uncertainty, as you clearly see in the market. Confusing, tricky and twisted. But then in this scenario also, we bring into you the strategies which you should focus on, and also the long-term fundamentals of the markets which are quite promising, and the undertone of the market which is quite bullish. We have with us Chakri Lokapriya, Chief Investment Officer, to talk on the markets and fundamentals. Thank you so much. Good afternoon for giving your time to ET Now. Mansi Dave this side. Considering all of the recent triggers, at least the domestic one, there are positive triggers. Just one concern, which is the FIs and the sell-off. No comeback from the FIs. Don't you think they are missing on an opportunity in a market like India?
Good afternoon, and thanks for having me. You know, we've seen FI selling, and usually that happens during periods when the INR falls, and the INR has fallen, to a record low on the back of the tariff uncertainty and the impact on Indian exports, net exports. So, but I guess, now the market is actually at a very reasonable level of valuation, trading at 19 to 20 times FY27. So that's a very reasonable number for an even 8% earnings growth. So against that backdrop, I think, we kind of, any trigger on the upside, now the GST is a trigger which will take it some amount of earnings upgrade, but some amount of tariff clarity will bring back the FIs.
Right, Chakri. Hi, good afternoon. So, like you were talking about how GST could be the big trigger that could take the market ahead. But, Chakri, in terms of the kind of announcements we've heard, of course, the direct beneficiaries like auto and FMCG did well yesterday. Auto continues to do well today as well. FMCG is rather subdued. So, a dead cat bounce perhaps, or a knee-jerk reaction is what we saw. But overall, on that index level, the GST announcement didn't do much. What's your reading there?
So clearly, GST here is a very good thing because, the tax rates reductions are fairly substantial. In many sectors, it's gone down from 18 to 5. It's gone from 12 to 5. So that means that's a good uptick of about 10%, all things being equal, to the earnings of these companies, because they've even a 3-4% volume increase will translate to those kind of bottom line increases. So that it is a sustainable thing. People who were waiting and watching to make a purchase, now it's very clear and definitive to make one. And second is, probably it now opens the room for additional interest rate cuts by the RBI, and that will be the next trigger to make the purchases. So clearly, it is a sustainable good move.
Okay, so that's a view coming on the consumption story, but we also have Kunal Bhutra in studios with us to talk technicals of the markets. Kunal, hi, good afternoon. Thank you for giving your time to ET Now. Good to see you and talking with you again now. But then looking at the indices, is there any confidence or, the only advice you would give is practice caution? Because see how we are literally witnessing the index moving, ranging from ups to downs, and in just one session, so much of churning in the indices is quite risky. Having said so, it's a stock pickers market. What are the stocks on your radar?
Yeah, it's a tough market, as you rightly said, Mansi. And I believe that the only positive which I'm seeing for the markets today is that finally that maybe the Friday jinx is over. The last 7 Fridays for the markets, it's not been positive. We've actually seen the Nifty performance being around 150 to 200 points on the negative side. So I think even if we close with a mildest shade of a green for the indices, at least that would be behind us. Yes, it's been a tough journey for the markets in the last, I think, 8 or 10 weeks consecutively, where the Nifty has seen a sharp correction and, the market breadth has fallen apart. So I believe that in that context, yes, one has to adhere a lot of caution in terms of risk appetite, in terms of way these, larger cap, themes have been evolving one by one on the downside. Whether it started off with IT stocks being underperforming, then you had the real estate, and now I think very recently you had the banking stocks being at the brunt of a sharp selling. So I think it's a classic sector rotation at play, and that is affecting the markets over the near term. In terms of levels, I would still believe that 24,400, 500 seems to be a strong support territory until the time we trade above those levels. There could be a possibility that those fight back rallies and pullback rallies would probably keep on coming for the indices. In terms of the trade, I would look out for a few large cap stocks. So the first one which I would actually be suggesting would be the likes of Tata Steel. That's something which is making a very strong comeback over the last couple of days. We've seen a very good breakout for Tata Steel. So it looks attractive for a near-term target of 174. And stop loss could be kept at 164. Shriram Finance, on the other hand, the stock is confirming a MACD breakout about the 590 mark. So that's another stock which I'll be bullish on for a near-term target of 610, stop loss 585.
Okay, so that's some of the picks that I've made it to Kunal's radar today, and also his strategy on how to approach the market right now. On that note, we'll step into a very short break and keep the conversation going with our experts and talk about how today's trading session is panning out, how we're expected to close for the day and for the week. We'll be right back.
Welcome back. You're still watching Closing Trades from SBI Live Studio, live on ET Now, and talking about the markets. Yes, a lot of volatility, but the last hour of trade and the markets are trying to see the recovery, attempting recovery, and also a promising one at present if we see. But in specific about the sectors and stocks, the food delivery space is on focus radar. And the recent announcements from Eternal and Swiggy, while they increase their platform fees, and at the same time, we also do see brokerage positive reports. Now, Snehi, just before the festive season, increasing the platform fees, and now the positive brokerage reports are doing really good for the space.
So, both positive triggers like you mentioned, Mansi, but the news today is the GST 18% that we have seen coming in on food delivery services. Now the GST Council has clarified that this is going to be a new norm for food delivery services, and to be very precise, its supply of local delivery services through electronic commerce operator, which is e-commerce operators, is now going to be taxed under that 18% GST bracket. Now, why does this change life and everyday operations for someone like a Zomato or a Swiggy? Is earlier Zomato used to pay 5% tax on their food delivery, but they did not pay anything on their delivery services because the ideology or what they believed was that the onus to do so was on the e-commerce delivery provider. In this case, their delivery person or the person who owned the vehicle on which the delivery was happening, like a two-wheeler. Similar was the case for Uber, Ola, and why Zepto is largely unaffected by this is because Zepto has always been paying that 18%, understanding that the onus lies on the company and not on the gig worker or the delivery person. So while Eternal and Swiggy followed this 5% model, you always had Zepto that was following the 18% model. Now, what happens, what changes for these companies, and what exactly is the provisioning when it comes to this 18% tax? What is the final incidence and who stands to pay it at the end of the day? To understand that and much more, let's connect with Mr. Bipin Sapra, the leader in direct tax policy at EY India. And Mr. Sapra, hi, good to be chatting with you. And just that, right, sir, help us understand what this entire 18% GST now means for companies like Zomato, Swiggy. How does everyday operation change for them, and who at the end bears the brunt of this 18%?
So I'll ask the last question first.
Okay.
The brunt always borne by the customer. It's you and me who order food from the apps would be bearing the brunt, unless and until obviously the price changes or the price of the delivery services gets included, has a GST included in it. But coming back to what this issue is all about, what you have to realize is that GST is paid by Zomato and Swiggy-like operators, the e-commerce operators, in case of food delivery. The liability to pay the taxes for food delivery services, and it's at 5%. Till now, Zomato and Swiggy have been holding a view that the delivery part of that, for that delivery part of that, they are also a platform. And the service providers, the gig workers who are out there providing the service of delivery, are also are providing the service directly to the customers. And given that the liability to pay the taxes on the gig workers or the service providers, the service, given that most of them are small and below the threshold limit of 20 lakhs, no liability comes into play today. This stand has been disputed in the past by the GST department, who feels that for whatever reasons that these e-commerce operators are in themselves providing the delivery services to the customers. Without going into that dispute, so no GST was being paid on the delivery fee which these e-commerce operators were charging. So from now onwards, what that has been done is that any delivery of goods, which would be termed as a local delivery services, and the government has not come out with a clear definition as yet, but local delivery services, which we assume would be either within within intracity or within a particular kilometer, and there may be a combination of all that when the definition finally comes out. But that will be the service of delivery which would be provided by these e-commerce operators. And the liability is now being shifted to the e-commerce operator for the delivery part also. And hence an 18% levy will come on that. So there'll be two components as things, if the current business model continues, 5% on the food being delivered and 18% on the delivery services. That's the difference which will come going forward.
Agreed. So one thing is for sure, the food delivery business is getting even more expensive. Mr. Sapra, good afternoon. What will be the financial burden on these food delivery platforms now that they'll have to bear both the 5% on food and the 18% on delivery? And also another angle, another tangent to this is how will this change affect the logistics, or let's say, for example, the truck operators or the logistics department who were handling this before?
Yeah, so the cost would definitely go up if an 18% tax is levied on a delivery fee. But then the other fast, quick service delivery operators like Zepto and Blinkit are charging 18% on the delivery services on a very different model, and that's being done. So there would be some change in the business models or some change in how the tax is being collected, but this will equally impact trucks and three-wheeler truck type operators or two-wheeler operators delivering other goods apart from the food delivery. So local delivery will include all those things. And trucks will also get included if these are being delivered over the platform. So and there are a number of those platforms who
Correct.
deliver stuff intra-city.
Okay.
There was no tax on them effectively till today,
Okay.
except in the B2B space. That will go to an 18%, and that's a huge tax.
Correct.
If the supply is not through an e-commerce operator, it may still continue to be outside the purview of tax.
Got it.
Some
Mr.
sort of a
Sapra, sorry for
dichotomy.
apologies for interrupting you. We just have a little paucity of time. Just want to understand if any of this is going to be retrospective in nature.
It's not going to be retrospective in nature.
Okay.
That's what has come out of
Okay.
the documents which are there.
Okay, perfect, sir. Got it. Thank you so much for your time today, Mr. Sapra. Really appreciate you joining us and explaining this to us in greater detail what the impact of this 18% GST on service delivery providers could be. Thanks once again.
Thank you.
Okay, then let's move on from there. And in fact, Chakri, I just want to get in your view on some of these delivery providers, your Swiggy, Zomato. Other than this 18% aspect of it, fundamentally, how are these companies looking to you? Because they have been on a one-way upward trajectory for quite some time.
Fundamentally, the Swiggy, Eternal are looking good. Swiggy, especially, it has corrected a lot, and valuation discount to Eternal is a good solid 40-odd%. Second, with the GST, actually the prices of the goods that they sell, let's say on Instamart, it has come down because of the GST cut, and therefore the volume benefit overall for the system offline and online are likely to go up. So that is an offsetting factor. And second is, it kind of remains to be clarified that an 8 plus 18% plus 5% is more than the total 18% GST. And now that there are only two slabs, why would the number be higher? And third is, as far as the final delivery is concerned, now, if it's a non-e-commerce, then what is the delivery rate? And then why is that any different from a delivery rate? So all things being equal, I think Swiggy has corrected a lot and looks good at the current levels.
Swiggy looks good at current levels, and yes, positive brokerage notes are the reason behind the upsurge. However, there is this news flow which you need to understand, on which we did take a detailed outlook from our experts. Chakri, thank you so much for giving your time and helping us understand the market from your lens. Thanks a lot. Have a nice day and a great weekend to you. On that note, we slip into a short break. On the other side, we'll keep the conversation on with Kunal Bothra.
Hi there, welcome back to Closing Trades. You're watching ET now and we're live to you from the SBI Live studio. Nifty struggling to hold on to the 24,750 mark, but one pocket that's doing extremely well today for itself is autos. And autos are on a tear after the big GST reset, as experts believe the industry will benefit in the first order effect. Demand will surge and festive sales are expected to be robust. This reform push comes at a time when the auto index is already the best year-to-date performer. My colleague Shrishti, who tracks the sector very closely, is standing by at the Hero Motor dealership in Mumbai in conversation with Fort Point Auto's Nikhil Dugar to get us a mood check from the ground. Let's go across to her, Shrishti.
Oh, well, yes, two-wheelers remain to be the backbone of the Indian automotive industry, which drives over 70% of the volumes in the overall share. But what is the excitement all about, and especially with respect to the GST rate cuts that have been announced? What is the situation on ground? Let's understand that from Nikhil Dugar, who is the director of 4 Point Automotive. Nikhil, thank you so much for your time and welcome to ET Now.
My pleasure. Thank you so much.
But Nikhil, firstly tell us, how is the excitement looking like on ground pre-GST announcements? Because people were any which ways anticipating that from 15th of August there will be some rate cuts that will happen. And now that the rate cuts are through, the announcement is made. How are you looking at the inventories? What's the experience?
So firstly, on 15th, when our Honorable Prime Minister made the announcement of the cuts on the GST rate, first 4 or 5 days there was certain uncertainty in the minds of customers also regarding how this will eventually plan out, how will it be implemented and everything. And we are dealers in Maharashtra. For us, the festive period begins from the first day of Ganpati itself. So first 6-7 days of Ganpati, people were busy in their Ganpati rituals and everything. Right now, post the announcement of the actual GST that has been made from the council, we have seen that the customer are trying to delay their purchases, waiting for the additional discounts or the additional price reduction that might happen after the 10% GST cut down. So the customers are waiting and delaying their purchases and waiting for the 22nd of September to kick in as soon as possible.
But the key question remains that post 22nd of September, when this implementation will be through, what sort of an excitement are you hoping for, and what sort of a booking numbers will you be working with? Give us some sense.
So right now there will be a delay in the bookings and the footfall. So what we are hoping is the pent-up demand that will be created in these 2 to 3 weeks will eventually turn into a proper sales post the 22nd. This is where we are expecting that the customer will have double reasons to buy a vehicle. One would be buying it on an auspicious day. The other would be the 10% GST cut that the government has announced. So we are looking for a good and a positive festive post the 22nd of September.
No, but the other thought is that if I happen to book a vehicle, say right now, since we are already in that festive period, for now we will have that inauspicious time in between. And if I take the delivery, then how will you treat me? You will be charging me what sort of a rate? How adjustments will you be making? Give us some sense.
So right now, anyone who's coming down to our showroom, what instruction that we have given to our sales team is that whatever the GST adjustment of 10% would be done, we are taking and we are communicating the exact estimated amount to the customer itself, and we are taking bookings on that amount. And whatever the difference would be, the billing would be post 22nd, that will be adjusted and be cleared in the terms of customers' point of view.
Nikhil, you already have the inventory in the showroom because with respect to the festives that will be around, I believe dealers are also very much excited and they want to be prepped up for the festive season. But along with that, you have the inventory in the system, the rate cuts are announced, so there's a bit of an uncertainty who will take that 10% difference. So is it going to be dealers? Are you waiting for some clarity? And what are you hopeful of? What actions could be there?
So we at this dealership are still waiting for some clarity from the government or the OEM. Saying that we right now are fully positive about the festival that is about to come. We are piling up our inventory so that once this pent-up demand is actually flourishing into a proper sales, we have proper inventories where we can cater the customer and satisfy all the needs that they're looking at.
Indeed.
So that was Shrishti from Fort Point Auto Live, and the dealers at present are waiting for the absolute clarity but are still piling up on the stock so that they can fetch to the festive demand. But then we also have two other experts with us on our panel. We have Ambrish Baliga, independent market analyst with us, and Somil Mehta, held alternate research Mirai Asset Share Khan. Gentlemen, good afternoon. Thank you so much for giving your time to ET Now. Ambrish, I'll start with you. GST rate rationalization, we did see cheer in the market, but it was short-lived. However, the festive season is upcoming. It's already started. How do you see the texture of the market?
See, the reason, this rally which we saw was short-lived, basically because, the expectations were clearly built up post PM's Independence Day speech. And whatever came out was not very different from what people were expecting. And markets had rallied in between based on those hopes. So basically, it is buy on hope or buy on rumor and sell on news. I think that's what has happened as of yesterday and today. But then clearly, I think the markets have seen the intermediate bottom. So I really don't see the markets going below those levels of 24,200, 24,300. Whereas on the upside, I think we would be more or less capped at, closer to 26,000 levels because unless, of course, we see the earnings uptick majorly coming in, I really don't see the markets crossing those 26,000 levels. So broadly, if you're talking of the next couple of months, I think we should be in this broad band of 2,000 points of Nifty. And when we're talking of the GST cut, yes, I think this will spur consumption going ahead, and especially we are looking at the festive season, and normally we see during festive seasons the consumption moves up. So this would be a booster for that. So, and it's been across, various segments. So from a consumption angle, yes, I think it was a very, very positive announcement.
Coming in. Saumil, hi, welcome to the show. Good afternoon. Want your sense on Nifty Auto. Now, the kind of rally that we've seen post GST, we were expecting to see a similar move coming in for FMCG, but unfortunately that's not been the case. But if you talk about some of these auto stocks that are doing very well for themselves, you also have someone like an Eicher, M&M, Ashok Leyland, Excite. They are soaring away for days in a row now. Let's talk about M&M in particular on the charts. Saumil, how is this stock shaping up? Because a 6% jump up yesterday, another 2% today. What are some upside levels you're watching here?
I think I'm pretty bullish on auto sector. The best risk reward at this point of time is at in Bajaj Auto. But yes, M&M, Maruti, Eicher Motors, TVS Motors, all of these stocks are looking really great. They are in a mid to long term uptrend, always taking support at 20 and 40 daily moving average, which is a very good sign. Every time it consolidates for a couple of weeks, it breaks that consolidation on the upside. These patterns are really positive for the stock. Now, in M&M very specifically, there was a very big range, if you see, from 2024 September to till now, till May 2025, there was a huge range, and that range is broken on the upside, which is a very good sign. Even Maruti has the same thing. So this range breakout has, this is a long-term range breakout. So I'm expecting 4,000, 4,200 for M&M on the upside. Crucial levels on the downside would be 3,200 and 3,000 levels. 3,000 is 200 daily exponential moving average, which is a very, very crucial support for this stock.
So take on M&M, but Kunal, weigh in here and let's talk about Tata Motors, a stock that's not done anything at all. In fact, very lackluster momentum coming in, and even the GST news especially on the EV segment, the 5% GST news was not able to excite this stock too much. Or what is your reading on the charts? Any near-term upside or any change in momentum you're spotting for this one?
See, I think the turnaround should happen for Tata Motors, but it would probably take at least another couple of weeks, if I'm not wrong. The reason why I say is that because after, I think, 2024, September or October 2024, for the first time, the stock has come back into a retesting of its 200-day moving average. Now, it's a very, very crucial parameter for a stock like Tata Motors. Just to put it into perspective, I think in September, October 2024, when the stock had broken below this 200 DMA, the stock was almost at 970 to 1,000. And from there, the stock had fallen down to 550, 600 levels thereabouts. So, it's a very sharp indicator that the stock would come back into a turnaround mode pretty quickly. The only point is that the confirmation of this 200 moving average is something which you will wait out for. That level, I think, is around 710, 715 mark for Tata Motors. So potentially another 3, 4, 5% up move for the stock from current levels is where I would believe that we could be looking at a potential turnaround. The initial move could be a bit slow, gradual for the stock price. But then if the entire auto sector, like what we've seen for the other two-wheelers and four-wheeler stocks, the fact that these stocks have done exceptionally well in the last 2-3 months. So it could be just about a matter of time that Tata Motors would also get back in line and cover up this massive underperformance. So I would probably go for a potential buy about this confirmation of 715 mark for Tata Motors.
Okay, so a slow and eventual move to start with, but the turnaround is absolutely expected on Tata Motors as well. 0.5% gain, 691. And not to forget, along with the auto space, the auto ancillaries are also doing positive in trade. Have a look at the tire stocks or the battery for that measure, or the ancillaries, the carbon black stocks. Those are also on the focus radar, because if the auto sector is going to work, the auto ancillaries are also going to perform. But having said so, let's also go across to another important story. Amid rising global tensions and US President Trump's wishes for Apple to manufacture iPhones in the US, the company is set to post robust sales in India in FY25 and 26. Let's go across to Sumita and understand what are the details we are gathering. Sumita, what does the sources say?
That's right. Apple's sales are expected to have touched $9 billion last financial year after its retail push came about. In fact, iPhones accounted for a majority of the sales that the company clocked. In fact, Apple just recently added 2 new stores in the cities of Bengaluru and Pune, aside of the already existing store network that exists in Delhi and Mumbai. In fact, the company is also planning to now launch new outlets in Noida and Navi Mumbai early next year, according to what sources are suggesting. And it only adds to Apple's reseller network. Now, this announcement of the kind of sales that Apple has clocked in, it's coming in at a time when the company is dealing with stagnant mobile device sales around the world. And of course, there's geopolitical uncertainty that persists, especially around China, given the fact that China has been earlier engulfed in a trade war with the United States. It's also the company's largest base. India, even though it represents still a fraction of its overall business, has a 7% market share here in this country. But the company continues with its push here, and this market is expected to become a key market for Apple in the next couple of years. So whether it's related to the company's manufacturing plants or retail, that's essentially in a push to reduce dependence on China. In fact, Apple is expected to account for 25% of, India is expected to account for 25% of Apple's production. And in terms of production and devices, well, just ahead of its annual event on September 9th, Morgan Stanley has released a note on Apple, and it expects Apple to increase prices modestly for its iPhone 17. In fact, average selling prices could see a boost of 5% in FY26. In fact, this is the first ever hike that is likely to be taken by Apple since 2017. However, Morgan Stanley doesn't expect demand to be impacted. So all eyes on the September 9th event now, when Apple unveils iPhones, watches and AirPods too.
Okay, Samantha, thanks for taking us through all those details. So, well, yes, big announcement expected from Apple soon, and the unveiling of Apple iPhone 17 is also expected over the course of next week. But Amrish, while we're talking about this entire mobile manufacturing topic, give us your sense on Dixon Tech, and if not in particular, the entire sector, and also on the semiconductor names like Keynes, for example, because we've just had commentary coming in from Donald Trump a few hours ago, wherein he said that he's also going to be putting tariffs on semiconductors, albeit it won't be very high. What's your take on that?
See, semiconductors again is a very long-term story. So, irrespective of whatever tariffs it puts right now, I don't think it's going to affect us at all, because we are just at the beginning of, manufacturing semiconductors. So, I think we have a long way to go. So I'm not really bothered about that. And as far as we are talking of the third-party manufacturing, which is being done by people like Dixon, I think that, again, may not really get affected too much, because there is a decent amount of sales which happens outside US. And these facilities will continue providing the models which are meant for other than US. So I don't think even they would get affected.
The government in itself is trying to give a better push to the semiconductor space. Longer story, of course, but in the next 5 years, independent semiconductor production hub is what the government dreams for semiconductor industry in India, on the back of which we also did see PM Modi inaugurating the Semicon 2025 conclave a few days back. But moving ahead and talking about a few other stocks which are doing a positive in trade, let's take a look at the exchange ancillary BSE Limited. The stock was trading with an upsurge of around 4%, and even right now it is trading with an up move 4 to 5%, 2, 3 to 1. Kunal, remember this week marked the first weekly expiry change, and even still the traders are positive about the exchange ancillary BSE.
Yeah, and I think it's a very good move for BSE. Of course, even though the stock has not yet confirmed a breakout or a turnaround as such, but the fact that the stock, after many days of underperformance, for the first time, I think it started to open with a mild bit of a gap up, and then sees a follow-through up move throughout the rest of the trading day, even at a point where the index at one point was down 0.5% or so for the banking index specifically. So I think this comes as a positive move for a stock like BSE. This could also mean that potentially we may expect the stock to gradually start to at least show signs of strength and resilience. The breakout point for BSE, as I mentioned also, I think was around 2,500 levels. So I would actually wait out for a confirmation of a breakout for a positional trade for BSE. But for traders who are looking at a buy for the stock at current levels, in the anticipation that the stock would get back into a turnaround, I think today's move shows those kind of ingredients.
Okay, so rather optimistic on BSE. And while we're talking about technicals, Somil, share with us some of your BTST ideas, your the stocks that have made it to your radar today. What's looking good?
The first stock which I like is Chola Finance. The stock is just broken out of a small consolidation, taking support at 2040 daily moving average. A good setup. Stop loss would be 1455 and the target would be 1550. The second stock which looks great from here is Glenmark Pharma. Have taken support again on the short-term averages, small ending diagonal pattern breakout on the upside. Stop loss would be 1990 and target should be 2175.
Okay, so these are the calls, trading ideas. Glenmark Pharma, the target, stop losses and the strategy from Somil is here on your screen. Moving ahead, let's talk about another incident. Earlier in the day, Mumbai's traffic department received a bomb threat from an unknown individual claiming to be from Pakistan. The message also stated that some terrorists have already entered the city and are planning an attack on the last day of Ganpati Visarjan, which is tomorrow. The Mumbai police have taken the threat seriously and have begun deploying armed forces across the city in anticipation of a possible attack. My colleague Nilesh Shukla is here with more details on the same. Nilesh?
Well, yes, Mumbai Police's traffic department on their WhatsApp number, their official WhatsApp number, had received this threat message by an unidentified individual. Now, this individual in his message had claimed that how there are several individuals who are roaming around the city with ID and other explosive devices and are keeping these devices into certain vehicles. And this individual also goes to an extent stating that how around 14 terrorists have already made it into the city and they will be active onto the Visarjan day, that is tomorrow. And this will create a massive damage to the city. Now this individual, this message sender also reveals that he is from a Pakistani-based gang, and which is why he is spreading terror into the city of Mumbai. However, police officials are investigating the case as of now. They have registered a case and are of opinion that they feel that it could be a hoax message. However, given perspective that tomorrow is a Visarjan day and massive number of crowd will be appearing in and around city, traveling across the state to witness this particular moment, and which is why no leniency is being taken up by police officials. Huge number of police deployment is already seen around the city. After this threat message, the security arrangements has only peaked up, and the Mumbai police are constantly on high alert.
Okay, well, unfortunate state of affairs coming in, and of course, something to be vigilant about, cautious about, and we'll bring you up to speed on everything that happens on this front. But once again, shifting focus to the market, and we were talking about BTST ideas, some stocks that Somil was discussing. But Kunal, what about you? What's looking good today? Any shorting opportunity, or are you a buyer on dips? Is that your strategy?
Yeah, absolutely a buyer on dips. No shorting for the index
Okay.
as well as for the constituents. But I think it's a good time to try and identify trades which I would believe potentially are nearing signs of a breakout for themselves. We were discussing IDFC First Bank in the morning. That's something which starts to look attractive from the mid-cap end of the private sector banking names. Now, I also understand that, yes, Bank Nifty has been a big laggard and a huge underperformer. But then when you start to see those signs emerging for individual stocks in terms of a potential breakout, you expect that the sector would also get back into a turnaround mode pretty quickly. That's my anticipation for Bank Nifty, and IDFC First Bank is something which I would recommend at current levels for a near-term target of 78 thereabouts. Stop loss could be kept at 69.
Okay, so these are the trading ideas coming from Kunal Bothra. Definitely a buy and dips market, a stock picking opportunity, and consider all of these stocks as trading ideas and opportunities. But Amrish, talking about the insurance space and individual health insurance and term insurance, 0% exemption, the GST announcement, it did not really reflect and kind of backfired in the yesterday session, but now the insurance space has made a comeback.
Right.
What is your take on the sector?
No, so surely it's a positive announcement, no doubt. But then I don't think the customers will get that 18% benefit. The benefit may actually come down to say around 10, 11%. I think most of the insurance companies are working on it, and we still don't have a figure as such, a clear figure on that. But they need to pay GST on the other services which they use. So end of the day, since there is no set off because of no GST being charged, I think somewhere the insurance, like the cost will surely go up. So that's the reason I'm saying that the benefit for the end user could be about 10 to 11% and not 18%. But overall, it is positive for this space. So because of which I think, at least in the medium to longer term, we should see most of the insurance companies, especially life as well as health, doing much better than what they were doing earlier.
On the insurance space, and lots to watch out for in terms of next week as we're drawing towards the end of today's trading session. Here's what to watch out for when it comes to next week's trade. Of course, on Sunday, the very important OPEC Plus meeting is going to be a key event to watch out for. The expectation is that OPEC is going to be keeping its output largely flat and unchanged, but we'll bring in Ashesha in a bit to help and decode that. For our markets, 10 September, we have the AMFI and SIP data coming out. Of course, the two weekly expiries, NSE on Tuesday and Sensex on Thursday, is going to be very keen to watch out for. The biggest trigger for our market is going to be the CPI numbers, the inflation print coming on the 12th. Well, that's the action back home. Over the course of next week from the US, you have PPI, CPI, jobless claims, of course, industrial production from UK, Japan. ECB rate decision is going to be happening next weekend, and so is the Fed decision on 16th and 17th of this month, which is why Fed is going to be going in a silent period. But we were just talking about this OPEC meeting to watch out for on Sunday, and Ashesha has joined us to take us through what the street is expecting. Ashesha.
Yes, Nehi, all eyes are on the oil market ahead of that OPEC Plus meeting that is scheduled to happen on Sunday, that is the 7th of September. And the larger expectation is that the OPEC Plus group of countries will perhaps go ahead and announce output hike yet again for the coming months as well. Now, remember, a series of output hikes have already been announced over the last few months. In the months of May, June and July, 4,11,000 barrels per day output hike was already announced. For August and September, 5,48,000 barrels per day. They've completely unwound the 2.2 million barrels per day output cut they had announced in 2023. So all eyes are on the kind of commentary that comes in from OPEC Plus countries. Now, if you look at the moves in Brent crude prices, remember Brent crude has fallen nearly 6% in the month of August, and it is down nearly 2% this month so far after several consecutive months of uptick that we saw in oil prices. But yes, as you mentioned, all eyes are on OPEC Plus, and the large expectation is that perhaps they could go ahead and announce another round of output hike for the remaining months of this calendar year.
Okay, so that's a take coming, and we'll keep a close watch on the OPEC Plus output hike and give you details of the same. But taking a look at what's happening with the energy pack and $67 to $68 a barrel where Brent crude is ranging, let's take a look at the oil refiners also. Kunal, oil prices are easing on surprise bill as you guess crude stockpiles, and the OPEC Plus is going to consider an output hike. MRPL, Chennai Petro, in the first half, it was doing positive. What does the technical suggest here?
So, first, if we look at crude prices, it's not as whether there's any major spike in the prices. Even if we look at the charts for crude oil, I think it's largely, if I'm not wrong, it's around $66 to $68 per barrel for the Brent crude, and there's
66,
hardly
67, yeah.
Yeah, so 66 to 68 range has been the range for Brent crude, and no major triggers at least in terms of the charts which have been building up. Earlier what used to happen is if there is the OPEC meet, which is very important, or the crude prices would ideally have gone to any kind of a momentum breakout, or there's been some sort of an anticipation, but that's missing for the prices so far. So that probably, I believe, could be an indication we may not see any major change on the prices or the Brent crude prices effectively, I think, over the next week. That, I think, could probably be a point where I would actually look at oil marketing companies, the likes of BPCL, IOC, HPCL. These stocks have been a little bit more quiet over the last few weeks. There could be a potential turnaround for many of the stocks in this space.
Okay, so that's the take on some of these oil-sensitive counters. But on that note, Saumil, Kunal, as well as Mr. Baliga, thank you so much for your time today. Let's start winding down for the day. Only a couple of minutes left as we draw down for the day and for the week. Let's hand it over to Ashesha, who's here to take us through what the closing trades are looking like. Over to you, Ashesha.
Well, yes, we are ending the day and the week from ET Now's SBI Live Studios, and let's take a look at how the markets moved in trade today. We saw solid recovery in the second half of today's trading session. Nifty is ending with an uptick of a marginal 1 odd point. In fact, it's absolutely flat at the moment, 24,735. But what a recovery it has been in the second half of today's trade. We did see some kind of profit booking as well. Let's bring up Nifty Bank for you up on your screens. That one also ending absolutely flat near that 54,100 mark. Broader market should also come out. Nifty mid and small cap index, especially with the kind of recovery that we saw in the second half of trade today. In terms of individual stocks, we had Eicher Motors. Auto stocks was flying bright in the second for the second consecutive trading session. We had Eicher Motors. That one is ending nearly 2.5% higher. M&M and Maruti Suzuki, these were also some of the top gainers from the Nifty 50 index. On the losing side though, ITC, that one was down nearly 2%. HCL Tech and Tech Mahindra from the IT sector were also reeling under pressure. They should also come up for you on your screen. So the IT sector clearly was in the back burner today for the second consecutive trading session. In terms of individual stocks, BSE, that continued to remain in focus today. Remember, for the first time this week, NSE's weekly expiry shifted to Tuesday, BSE's expiry shifted to Thursday, and analysts were penciling in market share cut for BSE, but actual data suggests that this has not happened, and BSE on the back of this positive news flow was gaining nearly 4.5% in trade today. Meanwhile, food delivery companies, the likes of Swiggy and Zomato, were also in focus. There is a lot of uncertainty with respect to taxation, especially with the new GST regime coming into play. Swiggy nonetheless ending the day with an uptick of 4%. Zomato or Eternal, that one is also holding up with gains of nearly 1%. Swiggy, in fact, we have a Motilal Oswal report. They're maintaining their target price at 560. And for Eternal, they've given a target price of 420 and maintaining their buy on both of these counters. Let's also put the spotlight on Glenmark Pharma. Positive news flow coming in over here for this pharma company, where they initiated multi-country phase 3 clinical trial for a drug. Positive news flow, and hence that stock is holding up with gains in excess of 3%. Meanwhile, we have Bharat Forge, where one of its arm acquired 940-acre land for developing a property over there. So Glenmark Pharma and a whole host of other stocks. Bharat Forge also ending the day with an uptick of 0.8%. But all in all, turned out to be a good day for the Indian markets with the kind of recovery that we saw in the second half. Nifty, although is ending absolutely flat for the day, above that 24,700 mark. And Nifty Bank should also come up for you on your screens. Good recovery in the second half of trade today. But that's all the time we have on the show. More news and updates will continue on the other side.